Hello everyone, welcome to another video on Cambridge O-Level Accounting Series where we will be solving paper 1 multiple choice questions again. And this exam is from May-June 2021, which is actually your new version, which has 35 multiple choice questions in total. But for the purpose of this video, we will only be solving multiple choice questions from 1 to 20. If you guys would like me to solve from 21 to 35, you can comment down below and I will try my best to make a video solving the remaining questions of this paper. But for the purpose of this video, it will only cover multiple choice questions from 1 to 20. And again, I would like to highlight that the variant in this case that we are solving is variant 12, which is 1, 2. And let's get started with our first multiple choice question of this paper. So again, it's about bookkeeping, which has apparently been a very favorite topic of examiners. I've been noticing that usually the first multiple choice question is actually dealing with accounting or bookkeeping and their main duties, things like that, right? So let's look at first multiple choice question. It is asking which statements about bookkeeping and accounting are correct. Right, so let's read all 4 statements here. Accounting is performed periodically rather than daily. Okay, seems correct. Accounting relies on having accurate bookkeeping. That is actually also correct, because if bookkeeping is wrong, then you can't really prepare financial statements, and that is job of accountants. Accountants will prepare financial statements. Bookkeeping includes preparation of financial statements. No, as I just mentioned, that it will be accountants who will prepare financial statements, not the bookkeepers. Bookkeepers only record transactions in the books. That's not their job to prepare accounting statements or financial statements per se. Statement 4, bookkeeping involves the recording of financial transactions. That is actually very correct. So statement 1, 2, and 4 are correct, which would be multiple choice, which would be option A for this multiple choice 1. So the correct answer to multiple choice 1 would be option A. Let's look at multiple choice 2. What increases owner's capital, right? So what increases owner's capital? A bank loan extended from 5 to 10 years, there isn't going to be any impact on capital for this, even though the bank loan has been extended. But what does it mean? It means that the life of the loan has extended, not the amount. So it's not going to impact owner's capital. Purchase of inventory on credit. Purchase of inventory on credit, again, does not have any impact on owner's capital, because if you make a journal entry for this, it would be, debit inventory and then credit accounts payable, right? So where do you see the impact of owner's capital in this question, in this transaction? There is none. So option B is also incorrect. Purchase of machinery by check. Again, if you make a journal entry, it's not going to impact owner's capital. So the correct answer to multiple choice 2 would be option D. Transfer of vehicle to business, right? To business from private use. So maybe owner has a private car or a delivery truck or anything which is a vehicle, and then he or she transferred or puts it into the business, and that's actually going to increase owner's capital. So the correct answer to multiple choice 2 would be option D. Let's look at multiple choice 3. William paid $500 in cash to Sonia for rent. How did Sonia record this transaction? So how Sonia is going to record this transaction would be, debit cash and credit rent receivable. So let's look at if there is any transaction like that. There is actually, it's the first one, debit cash and credit rent receivable. So the correct answer to multiple choice 3 would be option A. Multiple choice 4. Let's look at multiple choice 4. Multiple choice 4. Abdul buys all his machinery on credit. He provided the following information. So we have 2 accounts: machinery at cost, amounts owing to suppliers of machinery during the year, and pay attention to dates as well. In this case, we have been giving information for 2 years, which is 2020 and 2021. So during the year, Abdul pays $25,000 to the suppliers of his machinery. How much did he owe them on 30th April 2021, right? So we are trying to calculate the balance in this account here. So let's draw a T account. The opening balance is 19,000. The opening balance is 19,000. Then Abdul purchases a machinery because the balance goes up by 12,000, right? So he purchases a machinery on credit for $12,000, extra $12,000. So right, we have this here, 19 plus 12, and then he paid 25,000 on this account, which is going to reduce by 25,000, right? So when you do the maths in here, that the remaining balance or the amount that Abdul owes to the suppliers of machinery would be $6,000. So the correct answer to multiple choice 4 would be option A. Okay, let's look at multiple choice 5. Shula's financial year ends on 31st March. On 1st April 2021, there was a credit balance of $100 on Yasmin's account in Shula's purchases ledger. What does this mean? So again, in order to solve this question, the first thing would be to identify which party is accounts receivable and which party is accounts payable, right? So in this case, if you read on 1st April 2021, there was a credit balance of $100 on Yasmin's account in Shula's purchase ledger. So what it means is that Shula needs to pay $100 to Yasmin because Yasmin has a credit balance of $100. So she needs to pay to Yasmin, and therefore the correct answer to multiple choice 5 would be option B. Shula owed $100 to Yasmin. Let's look at multiple choice 6. Hasina buys radios from Nazneen at a list price of $10 each. Hasina bought 12 radios and was offered 20% trade discount and 4% cash discount. 2 radios were faulty and were returned to Nazneen. What was the total of credit note issued by Nazneen, right? So the credit note is basically, if you know the definition of credit note, this question is very easy to answer. So 2 radios were returned. 2 times 20 is 2 times 10 is $20, right? So that's the list price. But she was offered, Hasina gave 20% discount, right? 20% discount. Nazneen actually gave 20% discount to Hasina. So 20%, so that means that she only paid 80% of the price, which comes down to $16. Therefore, the correct answer to multiple choice 6 would be option B. The credit note issued by Nazneen would be of $16 to Hasina. All right, let's look at multiple choice 7. So multiple choice 7, Jamil sold goods on credit. Where did he first record the invoice he issued? So Jamil sold the goods on credit. It would of course be, it's gonna go in sales journal. So the correct answer to multiple choice 7 would be option C. Multiple choice 8, which statements about a 3-column cash book are correct? So let's read. It contains ledger accounts for bank and cash. That is correct. It contains ledger accounts for discount allowed and discount received. Not really, because we are talking about cash book in here. It records transactions before they are recorded in the ledgers. That is also correct. So the correct answer to multiple choice 8 would be option B, because statement 1 and 3 are correct as the question is asking us. Let's look at multiple choice 9. So multiple choice 9, which statement is not true about trial balance, right? It is a list of ledger account balances at a certain date. That is actually true. It can assist in finding arithmetical errors. That is also true. It is part of a double entry system. That is actually incorrect. It is useful in preparing financial statements. That is also true, because that's actually the basis of financial statements. So the correct answer to multiple choice 9 would be option C. It is part of the double entry system. It is not. Let's look at multiple choice 10. Multiple choice 10 is which error is an error of original entry. So you need to remember what is the definition of error of original entry. Error of original entry simply means that you have recorded the wrong amount in the books. So if I just quickly look at the options here, it's actually option A, because the amounts have been incorrectly entered. So the correct answer to multiple choice 10 would be option A. So all in all, you need to understand what is the definition of error of original entry. Now, this question happens to be easy but you should also read through all the options. But in this case, the correct answer to multiple choice 10 would be option A, because the definition of original entry is that incorrect amounts are entered into the books. So therefore, the correct answer is option A for multiple choice 10. Let's look at multiple choice 11. So multiple choice 11, a check of $85 received from Shakil was credited into Sham's account, right? So what has happened is that the company debited bank, but instead of Shakil, the company did bank debit and Sham's credit, right? So this is wrong, right? So in order to correct this, what they need to do is the company needs debit Shams and credit Shakil, right? So debit Shams and credit Shakil. And let's try to find for this would be $85, and let's try to find if there is an option like that, and there is. So the correct answer to multiple choice 11 would be option D. Let's look at multiple choice 12. So multiple choice 12 is Jamal's bank statement on May 1st, 2021 showed a bank overdraft of 1460. So therefore, it's not going to be any debit balance. It's either option A or option C. Now we need to figure out if it's going to be 1330 or 1590. So at the date, there were unpresented checks of 385 and uncredited deposits of 255. What was the cash book balance on May 1st, 2021? So we will start with 1460. We will add back 385 and deduct 255. And this comes to 1590. So the correct answer to multiple choice 12 would be option C. Multiple choice 13, what is included in a purchases ledger control account? So again, if you remember what items are included in purchases ledger control account, if you have the format of it in your brain, then this question is very easy to answer, and the correct answer to multiple choice 13 would be option D. Goods returned to credit suppliers are included in the purchases ledger control account. Let's look at multiple choice 14. So multiple choice 14 is Javed's sales ledger control account had a debit balance of $12,000. Interest on an overdue account is $40, and discount allowed is $150, which has been omitted. What was the correct balance on sales ledger control account? This is fairly an easy question again. So 12,000 plus 40 minus 150, which will give me 11,890. So the correct answer to multiple choice 14 would be option B. Multiple choice 15, which statements about capital expenditure are correct? It is money spent on day-to-day business operations. No, that is actually revenue expenditure. It is money spent on purchasing non-current assets. This is correct. It is recorded in the statement of financial position. This is also correct. It includes expenses relating to non-current assets. This is also incorrect. And another way to tell is only two of the statements. But if you look at the options, only two of the statements are correct and two of them are false, right? So the correct answer to multiple choice 15 would be option C, because statement 2 and 3 are correct in this case. Let's look at multiple choice 16. So multiple choice 16, Nia sold equipment with a net book value of $200. The proceeds of the sale, $250, were credited to the sales account and debited in the cash book. What was the effect of this error on Nia's gross profit and profit for the year? So both of them are actually going to be overstated. So the correct answer to multiple choice 15 actually is going to be option 16 is actually going to be option C, because gross profit, because the proceeds of the sales has been recorded in the sales account, right? So that means the gross profit is going to be overstated by $250, whereas the profit is going to be only overstated by $200 because of the net book value. So the correct answer to multiple choice 16 would be option C. Let's look at multiple choice 17. Why does a business provide for depreciation on non-current assets? To charge the cost of non-current assets against profit in the year of purchase. Well, it could be true, but let's look at other options as well. To ensure that non-current assets appear at the book value in the statement of financial position. This could also be true to ensure that non-current assets appear at book value. No, actually, it's talking about book value. It's not saying net book value. So option B is actually incorrect. Let's look at option C. To ensure that matching principle is applied when preparing financial statements. This actually is better statement than option A. To retain cash, and it has no effect on cash. Depreciation has no impact on cash actually. So option B and D are incorrect. So option A says to charge the cost of non-current assets against profit in the year of purchase. So it's very specific. It's saying year of purchase, whereas depreciation goes on for years and years until it's fully depreciated or the asset is sold off. So the correct answer to multiple choice 17 would be option C. It is about matching principle, where it says that current year expenses should be recorded in current year, and current year's revenue should be matched against those expenses and should be recorded in current year again. So the correct answer to multiple choice 17 would be option C. Let's look at multiple choice 18. So multiple choice 18, a machine with an original cost of $10,000 had been depreciated for 2 years at a rate of 10% per annum using straight line basis. It was then sold for cash with a loss of disposal account amounting to $700. A replacement machine was bought on the same day for $12,400 cash. What was the net decrease in cash balance, right? The first thing here you need to do is calculate the cash proceeds from the sale of asset. That is actually not given. So first you have to do that and then see the difference between the cash paid and the cash received, right? So let's do this question. To calculate the cash proceeds, you can follow this procedure actually. So $10,000 was the cost, and 10% is actually the depreciation. So $1,000 is depreciation using straight line method for 1 year. The asset has been used for 2 years, so when you do it times 2, the total depreciation comes out to be as $2,000, right? So 10,000 minus 2,000, $8,000 is the net book value of the asset when it was sold, and the loss incurred was $700. So you deduct $700 from the net book value to calculate the cash proceeds. So the cash proceeds, or the cash received from the sale of asset, is going to be $7,300, right? So now company paid $12,400 to buy the new machinery and received $7,300 from old machinery. Therefore, the net decrease in cash in this case would be $5,100, $5,100. So the correct answer to multiple choice 18 would be option B. Let's look at multiple choice 19 and 20. So multiple choice 19, why would a bakery business not include the value of inventory of stationery in the statement of financial position, right? It was expected it would be used in the next few months. It was purchased regularly and paid for in cash. I mean, all these reasons, it was not for resale again. So these options are not really defining anything. The correct answer to multiple choice 19 would be option D. It is applying the concept of, or accounting principle, which is called materiality. The item, the stationery, is of very low value, and therefore it's not included in the inventory, right? Let's look at, so the correct answer to multiple choice 19 would be option D. So let's look at multiple choice 20. Shilpa's financial year ends on 30th April. On 31st March 2021, she wrote off a debt owed by Tahir as irrecoverable. Which entry did Shilpa make on 31st March 2021? Right, so she's going to credit Tahir. So it's either going to be option A or option C. It's not option A because the debit is income statement. It should be irrecoverable debts. So the correct answer to multiple choice 20 would be option C. And this would be the end of this video, where I said this video is only going to cover multiple choice questions from 1 to 20. If you would like for me to make a video covering multiple choice 21 to 35, I'm very happy to do that. So please free to comment down below and let me know via comments, and I will make a video on multiple choice 21 to 35. I hope this video was helpful to you, and if it was, please don't forget to give it a thumbs up and subscribe to my channel for more videos like these. And feel free to share with your friends who are studying or preparing for O-level accounting exams. Again, thank you very much for watching this video.